We begin with the crash on the global markets overnight as the coronavirus fallout triggered an oil price war. This is the latest this morning. There was a 15-minute trading halt on Wall Street as the market plunged 7% at the opening bell. The UK's FTSE also crashed, closing down 8% as the virus triggers an oil price war.
Two schools in Sydney and one in Melbourne are closed today as students test positive. The death toll in Italy has spiked again, rising by 97 in just 24 hours. And the Prime Minister will today outline his plan to stop Australia sliding into recession. Ian King has details on US stocks where they went into freefall.
When Wall Street opened at 1:30 our time, immediate sell-off there. The Dow Jones fell by some 1,600 points, a drop of around 6.87%, and the circuit breakers kicked in, suspending trading, which is what happens in the US when you get a drop in the index of more than 5 points. US indices trading at roughly that sort of level throughout the afternoon here. Now, the kicker to all this was the oil price. Now, on Friday afternoon, Russia walked away from a deal with the Saudis and OPEC to try and cut oil production, which was an attempt to try and balance supply and demand in the wake of a drop in demand following the coronavirus outbreak. Russia was being asked to cut output by around 500,000 barrels a day, didn't want to play ball. As a result, the Saudis over the weekend more or less effectively declared a trade war on Russia, announced that they were going to drop their prices and up their production. The result was you saw this calamitous drop in the oil price, fell by around a third overnight, touching $1.33 a barrel for Brent crude. Now, bear in mind that we were at $71 a barrel in the second week of January this year. That shows you how precipitous this price fall has been. Now, Brent crude has hauled itself up off the canvas. It's trading around $36.50 right now, but still a pretty murderous day. And obviously that's borne down on the share prices of the big oil companies, the likes of BP and Shell, two of the biggest companies in the FTSE, and accordingly that weighs down on the index.
The ASX is also expected to plunge at the open this morning after Australian shares bled more than $140 billion yesterday. The benchmark's ASX 200 closed down more than 7% to a 14-month low, its worst daily drop since the global financial crisis. Nervous investors about the economic impact of the coronavirus outbreak continued an aggressive sell-off. They also dumped shares in Saudi Arabia as Saudi Arabia escalated an oil price war with Russia by refusing to scale back output despite falling demand.
We're at a point now where the central banks around the world and governments are trying to do more to support their economies, but we're essentially dealing with something of an unknown in terms of where growth actually might land, and it's the market's speculating on that outcome, giving themselves enough of a buffer that's causing this volatility at present.